Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be discussing some more positive news around Tesla stock. And this news piece is something that I actually have referenced in the most recent video. However, I made sure not to go too in-depth on it just because I wanted to go more in-depth on it specifically as part of a news video like I do every day. And so if you aren't familiar with this news piece already, this is good news. However, the market reacted negatively to it. So I will be giving some perspectives on why I actually look at it as a good thing and where the market has it wrong in terms of viewing it as a bad thing. So as always, if you all do enjoy these videos, please make sure to smash that like button. It really does help me out. But just getting into this content for today, like I've mentioned in previous videos, Tesla did announce that they will be offering $5 billion in Tesla shares for sale at their discretion, in which they're doing it a little bit differently and can decide whenever they want to sell shares. So basically this $5 billion makes up about 1% of the market cap right now for Tesla. If we take a look at the market cap, we are currently at around 442 billion for Tesla. So this $5 billion in shares being offered up is around 1% of that. And so in the pre-market, I noticed like around 6 a.m. this morning, I looked at the pre-market and it was up like 6% already. That was probably the most I've ever seen the pre-market up for my portfolio. And that was really crazy to see in itself. But as you can see, the normal market hours ended up being a big red day for Tesla at minus 4.67%. So Tesla kind of received a pretty negative reaction from the market on this. And I can understand why this happened, because with some companies, yes, this can be viewed as a bad thing. However, with Tesla in this situation, I actually think it points to more good things than bad. And there's really no bad side for this in my opinion. It just makes sense at this point for them to raise capital. And the reason this was a smart move and a good idea is because, of course, $5 billion can go a long way for Tesla. And if they're going to raise capital, they might as well do it now when the stock is up over 60% in the past month and when it's up over 168% in the past 3 months. So this was a good idea. However, like I said, in some situations, this can be seen as a bad thing. Like, for example, you have a lot of these pharmaceutical companies in which they'll announce efforts to come up with a Rona vaccine. And then, of course, you have the stock surging more than it ever has been before. And then all of a sudden, you learn that some of the big CEOs are selling their shares, or that they're diluting the shares by offering more stocks because they want to capitalize off of that high price point for the shares. Now, in those situations, that can definitely be viewed as a bad thing. That's usually a situation where a company is trying to take advantage of some hype behind the price tag at that point. And so we've seen that in the past with like Moderna and other companies as well, where with some companies, it's almost like they're just announcing some of these things just so they can get the share price up and sell their stocks. But in Tesla's case, it is very different and actually a good thing in my opinion. And my reasoning for this is because it just makes sense at this point. Tesla is early in its stages of growth, and when you compare it to what Amazon and Apple and other big companies have done over time, they have basically scaled their business a tremendous amount, which basically means reinvesting a ton of their profits to where they're either not profitable or barely profitable. And either of those aren't a bad thing in my opinion when you have a really solid, high growth, long-term company, because if you're really trying to scale your company at a level never seen before, you have to reinvest basically every penny that you get to put back into your company to make sure that you can build more factories and to keep scaling your business tremendously. So just addressing this extra $5 billion that Tesla could utilize, this is multiple Gigafactories. This is multiple Shanghai Gigafactories. I think the cost of the Austin, Texas Gigafactory, at least for phase 1, is just around $1 billion. So like I said, in the future, if Tesla really wants to continue to grow and scale its business to a tremendous amount, they're going to have to create more Gigafactories. They're going to have to hire more people. They're going to have to come up with more vertical integration and product services. And so with this extra capital, they can easily do so. And they can also use this to still kind of satisfy investors as well, where, like I said, at this point, really the most ideal thing that you can do is reinvest pretty much every single bit of your profits to the point where you're pretty much not profitable because it's all being reinvested. And although at surface value, not being profitable doesn't look like a good thing. However, it is when it's a company that's making lots of money, but they're just making smart moves by reinvesting every single bit of it to scale their business to make sure that they dominate in the long-term future. Now, where this $5 billion benefit comes into play is they can use that $5 billion for scaling their business. However, they can also make it to where they are still slightly profitable or even significantly profitable with the quarter announcements, and that's where it satisfies both investors like us, and then it also still contributes to the company as well, in which they have that extra $5 billion to contribute to reinvestment in the company and scaling the business further, like we've seen with Amazon and Apple and many other big companies in the past. So it's kind of the best of both worlds, where investors see what they're wanting to see. Even Elon Musk realizes that investors are relying on this company right now, relying on profitability. Honestly, I don't really care on profitability if it's being reinvested in the company just to make sure they have an even bigger lead than the rest of the competition right now. That honestly doesn't bother me. I'm not one of those people that counts on profitability, at least when it comes to Tesla, because I realize if it's being reinvested in the company, then it doesn't really matter to me because I'm a long-term investor. I care what happens in the long term, and when you reinvest a lot of your profits early in the growth of the company, then that enables it to continue to grow over time, and it absolutely dominate the competition. So like I said, profitability isn't as big of a deal to me as it is to some of those other investors that are only just focused on the numbers every quarter. So I can definitely see why they would do this $5 billion offering, and keep in mind, even without this $5 billion, I think Tesla would definitely be profitable in this upcoming quarter. However, it just makes it easier for them to reinvest into the company, build more Gigafactories, and then invest some of their profits that don't count the $5 billion offering as well, while also maintaining that profitability that a lot of investors want to see. So anyways, here's an article by CNBC titled "Tesla to sell up to $5 billion in stock amid its incredible rally," and this article is by Pippa Stevens. So as always, thank you for the information. But as it states right here, the additional shares will be sold from time to time and at the market prices, Tesla said in an SEC filing. And it also stated banks will sell shares based on directives from Tesla. And so just reiterating this right here, it says the additional shares will be sold from time to time and at the market prices, according to a filing from the SEC. And they stated, "We intend to use the net proceeds, if any, from this offering to further strengthen our balance sheet as well as for general corporate purposes." And even getting some perspective from some analysts such as Dan Ives from Wedbush, even he stated that the capital raise was a smart move, and I actually agree with him there. And another quote from Dan Ives also states, "Elon Musk is raising enough capital to get the balance sheet and capital structure to further firm up its growing cash position and slowly get out of its debt situation, which throws the lingering bear thesis for Tesla out the window for now." So the rest of that article is just a little bit bear talk and spreading uncertainty, which I don't agree with. So you can check it out yourself. I'll leave it linked in the description. And also, if you'd like to hear my thoughts on the current share price, feel free to check out the most recent video talking about how I think Tesla stock is on sale today. I honestly think in the long term, this is a great price to buy in for Tesla stock. That's just my personal opinion. Of course, nothing that I say in these videos is to be considered financial advice. But honestly, like I said earlier, I can certainly see why some people think raising capital with other companies could be a bad idea. Usually, sometimes you'll see companies get a little bit greedy and want to take advantage of a stock price. However, if there were any company in the history of companies within the stock market, if I were to choose $5 billion to give to any of them, in which it all relies on them utilizing that money to the fullest extent and the most optimization possible, then it would be Tesla. Tesla is all about optimization. That's where they win against all of their competition. They're all about optimization and improving efficiencies. And I know for a fact that Tesla will utilize this money much better than a lot of the other companies out there, and especially their competition. They will not be wasting this $5 billion. And like I said, if I were to give $5 billion to any company in the stock market, and the goal of that is to have them utilize it to the most optimized extent to where every single penny is used in the best way possible, then I would choose Tesla, because as we know, at this point in time, they don't waste anything, and it's all about this big optimization machine that they have. So in my opinion, although the market reacted negatively to that, they're not really looking into these things a little bit more and thinking, okay, how is Tesla going to use this $5 billion to make me more money as an investor in the future? They're just looking at it as, oh wow, now there's going to be more shares of Tesla for sale, therefore my shares are going to be worth less. When if you really start thinking about it and how Tesla is going to utilize this $5 billion, it actually adds more value to the company than otherwise, in my opinion. And then also keep in mind as well, with potential S&P 500 inclusion, then Tesla themselves could choose to sell some of these index funds and firms their shares, as it pretty much becomes mandatory once this announcement happens. So Tesla can basically choose to sell them shares once that happens if they decide that that's a point in time that they want to sell some. But anyways, I hope y'all enjoyed this video. Please make sure to smash that like button if you did, and also feel free to sign up to Robinhood and Webull in the description below. If you use my referral link, you'll get some free stocks, and especially with Webull right now, you'll get 2 free stocks if you sign up with my link and deposit $100 into your account, and those 2 free stocks will be valued up to $1,400. So that's nice passive income. But I hope y'all enjoyed this video, and I hope you have a fantastic rest of your week.